Very good afternoon. You're watching the newsroom right here on ET Now. I'm Ajay Sharma. The markets are trading flat today, but the mid caps, small caps are very vibrant. In fact, we have Vinay Paharia of PGIM to discuss market fundamentals and how he's approaching the market right now. Vinay, afternoon. Thanks for your time. We're chatting up after a long time, so good to see you. Vinay, let's talk about the more vibrant part of the market, and that's mid cap, small cap. Mid caps are nearing record high once again. How are you approaching the broader markets in terms of valuations? Are you seeing interesting ideas there, or is it starting to turn frothy once again? Or how the earnings been?
Yeah, sure. Thanks, Ajay, for having me on the show. Always good to be on the show. Uh, so the way we are approaching mid and small caps and the broader markets is not very different than the overall markets. We look at markets, companies from the prism of how their fair value is progressing over a period of time and whether we are able to buy that growth in fair value at a reasonable price. And when we look at from that prism, clearly there are a lot of interesting ideas which are there in the small and mid cap space, and clearly we are able to find a lot of them even in this market, and we do not feel the by the way the markets are frothy. We think yes, markets are trading at some premium, but it is still not in the frothy zone.
Talk about some of the ideas which you are positive on, not in terms of stocks but themes. I see one of the biggest microfinance company as one of your holdings, but I want to talk about purely the quarterly numbers of this space. Credit Grameen, of course, is the holding in your small cap portfolio. But if we were to only look at the all the numbers which have come in the microfinance side, most of them, Spandana, others, most of them have given good numbers and visibility shared by the commentary. I want to understand why you're positive on this segment of the lending universe, and do you not see some elevated risks also in this space?
Sure, I think we have to dig a little bit deeper, Ajay, not just into this one company, but in the approach with which we are investing in different companies. So, when we want to buy companies, we want to buy companies which are having better than their peer group average returns on equity and better than their peer group average growth over the next 4 to 5 year period. And when we are looking at these numbers, these are sustainable economic numbers. So that is the approach with which we are approaching many of these companies. And remember, while markets are fairly efficient, we can always engage in time arbitrage, which means if my investment horizon is longer, then definitely I have access to far more number of investment ideas than many of the other market participants who might be having a shorter investment horizon. I think that would be the common thread running across most of our investment holdings.
I want to understand your thoughts on the hospital space. Earlier, we had just Apollo, one or two hospital names. But in the last 2 3 years, we have seen that representation from healthcare has widened on in the market. Hospitals, in particular, some regional players have also IPO'd and then later on expanding. What makes you positive on hospitals? As I see some of the hospital names as well in your small cap, mid cap, especially the South-based hospital companies. Do you see them becoming large national players in the next coming years?
Okay, so I think that can be served as a test case. You can see within the overall healthcare segment, many of the hospitals are enjoying significantly higher than their peer group average returns on equity, and they are growing faster as well because they are like retail businesses. They set up new hospitals and you see volume growth follow through over a period of time simply because there is clearly a large unmet demand for quality healthcare. So I think clearly there is the organized companies and organized hospitals are offering superior quality services, and they are able to charge a premium for that, which is visible in their superior returns on equity. And hence, I think that is the reason why we are fairly positive on this particular micro segment within the healthcare space.
Right. What is your view on technology majors? the top technology majors, some of the big companies, which came out with slightly softer results this time round, and the entire market got punished. In fact, the entire universe, mid cap, small cap, all of them. In fact, market seem to have written off technology for now. But I see some big technology companies also part of your flexi cap portfolio. Want to get your thought? Is market overreading on the downside? The potential of technology is being misinterpreted, or what are your thoughts on technology?
Sure. So I think technology is a very interesting segment for the simple reason the stocks are fairly down and out, the expectations are running low, and of course, there is a threat of disruption from some of the recent developments in artificial intelligence. So clearly, there are a lot of headwinds, but within these headwinds, are we able to identify certain companies which should be able to emerge stronger as and when the cycle turns and should be able to take business from weaker companies? I think we are trying to take that approach while looking at the sector. But if you ask our view on the overall technology sector, we are clearly underweight. We think there are far more headwinds for the sector as a whole than tailwinds, and it's not just related to valuations. Hence,
Fair
we are
point.
underweight.
Fair point. Vinay, before I let you go, I want to also understand your structure on the market as we stand today, mainly on, say, if I take a 2 to 3 year view, last 18 months at benchmark levels, we have been sideways. We have gone down and come back. Mid cap, small cap got butchered. Now there is signs of revival there. How are you looking at the structure of the market 2 to 3 years, given the earnings, given the way rates seem to have peaking out, crude is under check? Do you see a good window, or do you see there are some challenges also at the horizon?
I think, Ajay, if you look at market and analyze it, uh, the smaller the slice of your time horizon, the bigger will be the chaos you will observe, and the bigger will be the dichotomy between fair values and market prices. So, for example, if you look at what happens to market prices over a 1 year period and fair values over a 1 year period, you will observe very random outcomes. However, if you look at on a rolling 3 year basis or rolling 5 year basis, what is happening to the underlying company's fair values and the market returns, you will be astonished to see that the markets are fairly efficient, and the underlying returns from markets clearly mimic the strong growth. And coming back to your question, I think clearly we are seeing the medium term growth in fair values to be reasonably strong, and hence we are not pretty perturbed about what's happening in the near term to the fluctuations in markets. So I would recommend that we should refrain from looking uh, towards shorter slices of market performance and look at the bigger picture, which will help us constructing and creating long-term wealth.
All right, Vinay, thanks so much chatting with us today. That was Vinay Paharia of PGIM. Vinay, great to have you. Time for a short break, but before we go, also hear out